back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
And Yatin, I can see the smile on your face. It's the second straight day of solid gains coming in on the last street, and it's a good Monday for various reasons. First, of course, we were expecting the outcome to be what we saw over the weekend, but we didn't really anticipate the quantum of the victory that the Mahayuti had seen in the Maharashtra Assembly polls. And secondly, of course, it was an action-packed weekend, not just for the Maharashtra polls. Let's not forget that we've our boys, of course, in Australia have. Come out with a great performance. We've seen Virat Kohli make a solid comeback. We've seen Yashasvi Jaiswal, come up with his maiden Australian knock.
Correct.
And of course, you've seen Bumrah, create magic on the field as well. So yes, it has been a comprehensive victory, with performances coming in from all corners, and we've seen the first test coming in our favor as well. And of course, the Maharashtra poll verdict also, fired up the bulls for a second straight session. We saw, 24,200 back on the screens, a 300-point up move. So all in all, in two sessions, we've seen the Nifty rally by somewhere around 800 points, which is a good 4% up move, Yatin. Mid and small cap indices, of course, we saw up move there as well, 2% uptick on the small cap index. But of course, the big talking point is the entire PSU basket. It's back in action, and that too in a big way. And we saw PSU Bank Index, Yatin, a 4% uptick coming in on the PSU Bank Index today as well. But let's talk about the advance decline ratio, Yatin. How did that pan out?
So the advance decline ratio almost 2:1, Nandita. Obviously, in the middle of the trading day, we had a small dip coming in. Probably a lot of people who were stuck at lower sides, booked some of the positions as well as unwound their positions. So I think a lot of unwinding happened today. Also, we had the MSCI rebalancing. That was a passive flow of nearly $2.5 billion. So almost 20,000 crore rupees buying is what we saw because of the MSCI index, according to analyst expectations, and obviously half of that is attributed to HDFC Bank. But in the mid cap end of the market, we have stocks like Poly, Medicure, Gillette, LG Equipment doing well in trade, the double-digit gains coming in for that stock. As far as Adani Group stocks are concerned, still there are concerns. So Adani Green, that stock slipped 8%, Adani Energy Solutions slipped 4%, and so did CRISIL as well as Vijaya Diagnostics, almost 4-5% down for all of these stocks. But yes, as I mentioned earlier, the Adani Group stocks clearly under pressure. But yes, overall markets looking healthy, especially after the outcome of the Maharashtra elections.
That's true, Yatin. Let's talk about some of the frontliners that did well today. PSU names, dominated the gainers list on the Nifty today. So ONGC, Bharat Electronics, L&T, BPCL, SBI, Shriram Finance, and of course, the last hour buying, for HDFC Bank also pushed the stock above that 1800 mark to a fresh 52-week high today. Although it cooled off a little from that level, but still it clocked in a new high of 1800 rupees or thereabouts. On the flip side, JSW Steel, top Nifty laggard, given the fact that it will be replaced by Zomato on Sensex come December 23rd. So this was the top loser on the Nifty. Aside of that, Bajaj Auto, second straight day of weakness. Some of the tech names under pressure after a 3.5% uptick on the Nifty IT pack on Friday. We saw some of the technology names coming under pressure today. Tech Mahindra, Infosys, some of the names under pressure, and so were some of the consumption names like ITC and Asian Paints. But Yatin, want to talk about Reliance Industries. That was one of the heavyweights that saw good buying today. Remember, in Friday's session, it was among the top contributors on the Nifty. Today as well, there has been an upgrade that has come in from global brokerage Citi, wherein they have upgraded the stock to buy from neutral, and target price has been bumped up to 1530 rupees per share, which implies an over 20% upside from current levels. Now, Citi is saying that the risk reward has turned favorable after a period of underperformance. Of course, we saw the stock underperforming right from 1600 levels, 1608 levels. That was a 52-week high to down to 1200 rupees levels. This was, of course, after the 1:1 bonus issue that the company had announced. But what Citi has said is that the refining margin picture will improve for Reliance Industries going forward, which is something that other brokerages have also pointed out. And this was one of the pain points for Reliance Industries. There was a couple of quarters of challenge when it comes to refining end of the business. That is expected to reverse given China's reduced export competitiveness. So this is one thing that could be a trigger for the stock. And aside of that, Jio, according to Citi, is well positioned to benefit from future tariff hikes. Remember, in July, we saw all the telecom majors, hike tariff prices for the first time in 3 years, and major brokerages also believing that FY26 and FY27 will see one more tariff hike each. So for that, Jio is well positioned to benefit, and it will also be benefiting from any move, on the to improve data pricing as well as 5G monetization. Although there are some concerns about softness in the retail, end of the business, and that is expected to continue for a couple of more quarters. But the expectations have been tempered down on that front. And still, Citi says that retail softness may lead to 1% average consolidated EBITDA cut over FY25 to FY27. Just want to point out that there have been a couple of notes from brokerages over the last, couple of weeks, wherein Morgan Stanley, they also had an overweight rating and target price was at 1662, which implied an over 30% upside on the stock. And they had also said that refining margins have started to recover after a couple of challenging quarters. And they've also pointed out that the stock has priced in all the challenges, but the stock is yet to price in any improvement that the company may see. So these are some of the brokerage views, and even CLSA in fact had projected a 30% upside on the stock of Reliance Industries when they came out with a report earlier this month. So all in all, the views coming out from brokerages on Reliance are pretty upbeat. The stock has corrected from its recent peak of 1608 rupees, 24% kind of correction coming in, but looks like going forward the stock could see some bit of upside trajectory.
And I think Reliance today witnessing good bounce back. I think on the Friday's trading session also stock gave leadership today also, good 1.5% higher for that particular stock. But Nandita, what was also doing well in trade were the real estate stocks, and obviously with the BJP government coming in Maharashtra, not only Maharashtra based real estate stocks were doing well, but global real estate players like DLF, Sobha, all of them were doing good in trade. Obviously, if you look at the brokerages, they have been quite bullish on real estate stocks. Morgan Stanley came out with a report on real estate stocks in which they believe that both DLF as well as Oberoi Realty provide a decent amount of upside from the current market price. In fact, they have an equal weight rating on Oberoi Realty with a target of 2060. And they have an equal weight call on DLF also with a target of 910. Now, they expect that the pre-sales growth in projects as well as in the average selling price should be higher moving ahead, as well as luxury segment is something which will benefit from the GDP growth as well as rising middle income. Now, if you look at Morgan Stanley on DLF, they believe that the EBITDA margin expansion is expected to be seen to a level of 36-38%. They also believe that the return on equity, which is currently 7.5%, should double in the next few financial years to a level of 15%, given the fact that the business strategy need not be changed significantly, but the sales momentum will clearly help return on equity moving higher. Overall, if you look at the view of brokerages, the luxury real estate demand is set to rise, and probably companies like Oberoi Realty and DLF would be benefiting. And both of these stocks, Nandita, DLF and Oberoi Realty, were up almost 2.5%, each in today's trading session.
That's true, Yatin, and real estate stocks have been witnessing hectic buying action, right? I think the index per se has been up for a 6th straight session, if I'm not mistaken. So yes, a Realty pack also buoyant, and the stocks that Yatin mentioned, of course, up and about in today's session. But the other stock, that was hogging the limelight today was Zomato. This is one of, I think, Yatin stocks when we keep discussing this stock time and again. But there is so much news flow in the quick commerce space that we cannot really ignore this stock. Of course, now this stock will be the first new age stock to be a part of the Sensex 30, and it will be replacing JSW Steel, given the fact that no surprises, because this particular stock, although it has seen a correction, it is still given a 125% kind of a return this year so far, and JSW Steel in comparison has given a 10% return. So yes, it will be replacing JSW Steel on the Sensex from the 23rd of December, and likely inflow as a result of this inclusion would be somewhere around $454 million dollars as per IFL alternate research. Now, the company has also received shareholder nod to raise as much as 8,500 crore rupees via QIP. Remember, the board had given approval for this fundraise back in October. And the company had maintained that they will be looking at this fundraise to strengthen their balance sheet at a time when competitive pressures are increasing in this space, Yatin. Of course, Swiggy has just made its stock market debut, although it has some time to come back to come to profitability. But Zomato has already clocked that hurdle, and of course. Don't forget that the company also acquired Paytm's entertainment business for somewhere around 2,000 crore rupees, which is why the cash flow had dropped for the company, and that's why they are looking at a fundraise also to be ready to make any more acquisitions or innovations in the quick commerce space. And of course, we also had Zepto recently announcing a $350 million fundraise, which is I think the largest 100% domestic fundraise within the Indian startup ecosystem. They will also be looking to list pretty soon, somewhere in 2025 or so. So in that sense, the company has to be ready to take on heightened competition. The stock, of course, was up 7% at one point of time, but it paired some of the gains and ended higher by about 3.5% to thereabouts.
Clearly good going for Zomato, and I think with Zepto's fundraising as well as Swiggy's listing, a lot of action in this quick commerce come food delivery business. One of the emerging businesses, Nandita, high growth, and all of these companies have been showing profitability to investors, and probably that is the reason why Zomato today stands at a very tall 2.5 lakh crore market cap with the Sensex inclusion already announced. I think Nifty inclusion is something also with the markets it's looking forward to for Zomato.
All right, then those were all the stocks on our radar this afternoon. It was a good day of trade, good 2 sessions of trade. Let's see whether or not we can sustain this or maintain this momentum going forward. I was talking to one of the technical analysts in the morning, and I said, is this a trend reversal? Can we say the worst is over, Nifty has hit its bottom and stuff? He said that a close above 24,500 is what will determine whether the trend has actually changed or not, or whether it's just a feel-good factor that there's so much alignment between centre and state, after the Maharashtra election results. But let's see how things really pan out. But for now, nobody's complaining. After a string of bad news, in terms of earnings and stuff, we've managed to stage a very, very good comeback. But with that, I think we've come to the end of this edition of Closing Bells. So from Yatin and me, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.